Hi, Chris Marchese with you here Friday, the 25th of September. I just wanted to briefly go over what happened during the week, and it was a lot, and some other notable news. First, we'll start with JP Morgan. They were again caught manipulating the precious metals, and this time they have to pay a $1 billion fine. This is a rounding error for the company. So I don't see what is going to stop them. This is obviously not a deterrent, and it's rather sickening. Instead, they should have very stiff penalties. Let's say 25 billion, and if they do it again, make it fivefold that. That will really cause a deterrence for them messing with the metals markets. And they are essentially government agents. I mean, the Fed is a government agent, and the commercial banks are members of the Fed. And so I do understand that they want to keep the price of gold and silver both artificially low because when they're high, it delegitimizes the dollar. Paul Volcker knew this. Alan Greenspan knew this. The smart central bankers. And don't get me wrong, Greenspan was evil as can be, but he was intelligent. Bernanke, Yellen, and Powell, not so much. So we also had a big sell-off in the metals and miners this week. But this, I've been writing about this for 2 months. First on the or 3 months. First on the Free Gold Seeker Friday release. It's just a roundup of the week's news in mining. And, I kept saying there needed to be a correction, but we kept going up. We basically went up straight from about 1450 to 2070 at the peak. And now we're down at 1865. I would still like to see it go a little lower, maybe 1800, 1825, at least an intraday spike. It doesn't have to do that, but I'd like to see a little more of a washout, or at least more consolidation. Silver really took it on the chin. It was trading at 29 just a few weeks ago. That was obviously a spike top, and I think it traded below 22 intraday this week. Now it's around 22, a little over. That was a healthy consolidation because silver we basically went from $13 in March up to 29. So to have a 35 to 50% retracement after a big run up, that is quite normal, especially in a bull market. A lot of people don't understand that bull markets have the most violent corrections, and people get scared out. And it's totally understandable. You have to have a certain mindset to be able to handle this type of volatility. And so moving on, this week, Peter Spina and I had a couple meetings. The first one with Premier Silver, which is led by Bob Archer. Well, not led right now, but he will increase his allocation towards that company, as it goes public. He was he really built Great Panther Silver uh, in last cycle, which was a nice little stock they had. I went and visited their operations; they're very good. But the one I'm more excited about is Santa Cruz Silver. I've known Arturo Prestamo, the founder and CEO, since inception of this company, and they had some operational issues at their Veta Grande mine, and they finally threw in the towel, and they set their sights on an excellent asset, the Zippin mine, owned by Peñoles, and they were able to work out a deal before the silver price really took off. I think the price was around $15 or so. That they would acquire the property for 20 million. Today, it would probably be twice that or more. But Peñoles sticks to their word, and they're completing this deal, and this is really going to propel Santa Cruz Silver to producing, I don't know, 5 million, 4.5 to 5.5 million silver equivalent ounces in 2021. And by 2023, they're looking to go to about 6, maybe a million, a little higher than that, silver equivalent again. So the stock is dirt cheap relative to the cash flows. And just a quick note, the all-in sustaining costs of the Zippin mine are about $16 an ounce, which is not cheap, but that's exactly what you want in this environment. It's not high, it's not low, but you get really good leverage, especially when silver's at 22, 25, 28, 30. And we're definitely headed over 30 over the next year, 2, 3. So I'm going to move on now to stimulus. So there's more talks of a stimulus package coming out. Democrats can't agree. Republicans and Democrats can't agree at this moment. I don't think it's going to be agreed upon before the election, although that was the initial goal. But now the range of the stimulus package is between 1.5 trillion and 2.4 trillion. And once that is announced, I do believe that will push the metal prices higher, because this is, I think, will only be a stopgap measure. We will see more stimulus packages next year. This one might be announced next year, but I fully expect at least 2 next year. The Fed is continuing to buy up assets like no other, monetizing everything they can. They just have no clue what they're doing. They don't understand how the market economics works. And, we've relegated ourselves to socialism. And, it's a sad state of affairs. America used to be the land of opportunity, and it is becoming less so every day. And the more we have these kinds of issues going on, especially the infighting among people over Black Lives Matter and all of those, not just Black Lives Matter, but all of those groups, people are getting very passionate, very violent, as we've seen through the riots. That is about it. Really. Next week, so we've started to build the model portfolios, and we will hope to roll them out next week. We also have a couple reports in the queue. We don't want to put them all out at once, so there should be more next week, and just a lot more coming. We plan to increase our content beyond what is offered now, especially working in conjunction with Goldseek and Peter Spina. So that is about it. Have a good weekend, and we will see you next week.